Hi, this is Hyperwave. I'm Leah Wald here with Tyler Jenks, and together we are going to hit the closing bell today and probably stop right at closing bell. We're going to look at the major indices because things have been a little crazy this week. Some of our clients have been fun and messaging me at crazy hours. Love you guys because you're not sleeping. And neither are we. So we're going to check it out. We're also going to look at Bitcoin, but Bitcoin's still being boring, which is not that fun. But we are going to take a look at everything that we're seeing. We have fun earnings today. A lot going on, definitely in traditional markets, and especially important as per our title with upcoming elections. And that very much has to do with why, again, we are doing the webinar that we're doing this Saturday. So if you guys want in, you have to sign up ASAP. And with that said, Tyler.
Great. Thank you, Leah. I know this is a little bit of funny time. We're about 30 minutes, 25 minutes before the close. So I wanted to be looking at charts as we go into the close today. We've had 4 or 5 very disappointing days in the last 10 days where the market will try to rally and then give up half or more of its gains going into the close. Today, it looks like it's serious, meaning we started strong, we got stronger, and we're actually getting a little bit stronger into the close, depending on what you look at. We're not going to look at 100 charts today like we've been doing. We're only going to pick out 10 or 15 of the ones that I think are the most important. And again, just to review, I believe the last 4 or 5 weeks of downturn, which has been on the order of 8 to 12%, depending on what we're looking at, is almost completely a political event. This morning we had consumer confidence come out, and it is as powerful as anybody's ever seen it. Corporate confidence is very, very strong. Earnings continue to come in general, above expectations. There's been some slippage on revenue, but it is still enormous numbers in terms of actual absolute revenue. And the economy continues to be strong. Therefore, what we're seeing in all of this confusion, even though it's doing some technical damage, will be resolved, in my mind, a week from today, on the 6th of November at the election, one way or the other. And in either case, I don't expect it to hurt the market. It's only that in one of the cases, it might greatly help the market for the rest of this year and into next year. Bloomberg unusually came out with a story yesterday that said, my oh my, if the Democrats win the House, that could be bad for the stock market. That's the first negative thing that I've seen between Bloomberg and the progressive part of our politics, recognizing the fact that the strength of the market has not come about because of progressive policies, but have come about because of the conservative nature of what the Trump administration has been attempting to do. So we will test that theory in a week. I've been telling all of our consulting clients that the last 4 weeks has been very difficult for everybody in the market, certainly worldwide, but particularly here in the United States, because it doesn't make a lot of sense with the underlying economic background. So as we count down day by day, we will keep reporting day by day on what we're seeing. And let's do that by going right to the charts. We will do a bit of screen share here. Oops.
While you get it, I am going to show our webinar really quickly. Tell me when you have it up. Well, actually, I'll be able to tell.
Yeah, go ahead.
All right.
That would be great.
Boom, boom, boom. Where do I even have that up? Here we go. All right, everybody. So it is this Saturday. So I'm trying to do this pretty quickly. And again, it's covering GBTC. Everybody can put in and has actually a lot of people have asked for some really, really interesting stocks. And Tyler, you can explain that at the end. But Tyler is going to be doing a mock portfolio with the different stocks that you guys have been asking about. And you can include Bitcoin. So again, so it's really a portfolios webinar, all different types, from random to pre-constructed, closed-end, open-end, ETFs, and of course, our favorite GBTC. But again, given that we are doing it on Saturday, obviously it's prescient given the elections. And so as Tyler will talk about today, as we've been talking about how to, especially in these types of current trends in interest rates, stock markets, econ, domestically and globally, protect yourself and create the most optimal portfolios, bull versus bear. And also, again, on how to do it, which is the fun stuff, both incorporating crypto and your traditional markets. And Tyler has his charts up.
Great. We're going to start with the Dow Jones. And we have broken down last week and so far this week below the long-term moving average. And Consensio says you need to be raising cash. We have been raising cash. I told you that we also put on a 15% inverse fund. We're ranging between 35% and 50% in cash, plus now 15% inverse, using some of that cash up just as we get closer and closer. Now, today, the stock market, I'm going to switch this to a daily. Just for a second. To show this recent movement today, we are at the highs for the day or very close to it. And we still have not penetrated back above the short-term moving average, but we are holding above the June lows, and we are holding above the previous lows, going all the way back into April, which were lower on the Dow than back at the beginning of the February lows. And that's important. And a lot of commentators are talking about this fact that this would be a reasonable turning place. We've still got 5 trading days until the election. And if we can hold down in here and even work higher, that will, to me, signal the possibility of a bottom regardless of how the election comes out. And we'll talk about that in just a moment. Okay, I want to just switch it back to the weekly to look at these other charts. But just notice where these lows are occurring. This is the S&P 500, also having a very strong day today, with a little over 18 minutes to go until the close. We'll see if there's big sell orders coming in or if we're going to be able to keep this momentum up. Let's take a look at the NASDAQ. This is the NASDAQ 100, and it is having a big day today. Up about 1.1%, up 78 points right now. The Dow is up 35 points. The 340 points now, 350 points, and the S&P up about 35. When you take a long look at this, you can see the bull market is being challenged with these breaks below the longer term moving averages. We are in an area of support off of these old highs back here, but we have taken out all the shorter term highs and, the shorter term lows, which is not a good sign. I'm using the 3, 7, and 30, but we've also got the 50 on here, which is similar to the 200-day moving average, just so everybody understands what we're actually looking at here. I wanted to look at the Russell, which is actually down for the day, and is in a full bear market mode. We've been advising people, and in our accounts, our discretionary accounts, we have no more small or mid-cap exposure. And I think that is a dangerous sign, in that the broadening of the market 5 weeks ago, where everything was in an uptrend, was an important signal to me, and why I started interpreting market action as political and not economic. But the Russell's continued weakness calls that into question. The economics haven't come through yet, but often they show up in some of the outer boroughs of the stock market, such as in the individual sectors or industries, and also in things like the Russell 2000. Now, on a daily basis,
Tyler, kind of lost your mic there. I mean, you're still on. Yeah, perfect.
Okay. On a daily basis, the Russell is up almost 1.8% today, and that is at least a reasonable type of action with what the other indexes are doing. Okay, let's take a look at the sectors we've been looking at, the good ones and the bad ones. We'll start with the good ones. This is the utility index, which has now gone weekly for almost 10 weeks sideways, while all the others have been coming down. We're going to take a look at a couple of other areas that have shown a little bit of strength. Let's take a look at energy just to see what it's doing today. I'm going to pull up the daily chart here. And it's getting a fairly good rebound, but has not been able to even catch up with its falling short-term moving average. And we do have a crossover in terms of the intermediate and the long term. So energy, which was looking spectacular back in early October, has given up everything and taken out all the previous lows. Back to the weekly charts. And I wanted to look at the consumer service on a daily basis. We've got a pretty good day going, not taking out yesterday's highs yet, but a good candle to the upside. We will stick with that and look at the consumer goods, which is quickly coming back up to its intermediate term moving average and shows a reasonable bottom at this point, although it's got a lot of overhead. There's a lot to overcome between now and next Tuesday, and it could still go either way, but I'm glad we're finally getting a day in which we've got pretty broad participation across all sectors. This is the technology, which is bouncing a little bit. NASDAQ's having a good day, as we saw. Let's take a quick look at the home builders. It's having a very good looking day, taking out the last 5 days of downside action, broken sharply above its short-term moving average. Take a look at U.S. crude oil having a weak day. It's down 0.5%. And just one more, the telecommunications sector also close to an engulfing candle to the upside, and is testing these bottoms over this period of time. So back to the weeklies, because I want to look quickly at some countries around the world. It's too early to know how they're going to react to today in the US stock market, but if we can just close in 11 more minutes, strong, we're at 400 on the down, 24,844. Okay, we just hit 400 new highs for the day on the Dow. I'm going to now take a look on a weekly basis at some of the other countries and see if we're getting any sort of support around the world. First of all, we will look at the UK, which was having a reasonable week, coming off of the lows from March. Maybe we'll see what tomorrow brings, if there's follow through from US markets. Obviously, Europe has been closed since about 11 o'clock this morning, and we are higher in the US markets than we were at that point. We have gotten very interested in Brazil. Brazil is breaking out to the upside above all of its moving averages. It might be a leading indicator for emerging markets, or it might be as simple as the new election and the move to the right, sharply to the right. This was followed by the announcement that in Germany, Angela Merkel has announced she will be stepping down as chancellor. That won't occur very quickly unless she is forced out, but very disappointing elections over there, once again in the direction of from progressive over to the right. All of these countries that I'm looking at, we'll take a look at Australia very quickly, a bit of a bounce. All the others are just minor ups and downs. Nikkei had a pretty good session, but you can see that it basically for the last 3 weeks has moved from 24,000 down to 21,000. And there is good support, just as there is in the US markets, as you go to these previous periods in February and again in June, a logical place for at least to get a bounce back up to the moving averages, which are slightly moving in a negative direction. We talked about India yesterday, and it is accelerating to the downside. So where do we find ourselves amongst all of this? Basically, to me, what we are looking at is a 4 to 6 week period of indecision. And after being up 10%, the US stock market is basically given up all of that 10% in the last 4 to 5 weeks. And And while doing that, has done very little damage fundamentally, but technically, as you've seen, we've turned down short, intermediate, and long-term moving averages. We've broken upward trend lines, but for the last 2 or 3 weeks, it looks like it's trying to hold on. Dow now up 440 points, getting stronger into the close with just 7 minutes to go. So it looks like for the short term, we have put in a bottom. We will know that tomorrow and on Thursday, if we can keep going. If we reverse out of this one more time before the election, then it's going to get very nasty next week, in my opinion. I still believe that the US market is in a bull market and has got 1 year to 2 years to go before we run into real problems. But I cannot even speculate on what will happen if the Bloomberg observation is correct and the Democrats take the House. What will the reaction in the markets be? Will the technicals be able to run over the fundamentals even in the short period of time? I don't have an answer to that. So we will stay in cash as much as Consensio tells us we should be. I'll lean even a little more towards conservatism by putting on some inverse funds going into the election, and then be prepared for one of two things to happen. Either the Republicans hold the House, and in my mind, we immediately have a return to a bull market in November and December, going to new highs for the year, taking back the 10% that we've lost, and even closing stronger than that. If, on the other hand, the Democrats take the House, one of two things can happen. Either there will be some additional confusion in the market in the form of volatility, both up and down, but then no real damage done and a slow recovery into the end of the year, or we will have panic in the markets and we will drop through all of these lows from February and from April and from June and the recent lows, and we could be in a full-blown bear market. I don't expect that to happen, meaning that alternative of a Democratic win. But the very best, I would assume, is that November and December will be choppy, and we will be pulling out our hair trying to figure out economically if we are slipping into something more than just a 10% correction in the market. If we could go all the way to a 25% bear market, in which case for the last 15% of that 25%, my clients will be out of the market in terms of exposure, and we will be sitting on the sidelines, which Consensio demands. It's too early to make any of those calls. We don't have very many more days to go, but we're quickly coming to a resolution of what I consider to be one of the most important economic questions, at least of the last 10 years, and maybe going all the way back to the 06-07 period, in which people were having the same discussion that we're having right now. We all know that at some point this bull market will be over, and because of the debt credit situation around the world, it's going to be very difficult to pull out of this bear market recession, because the bear market will very probably be the cause of the next recession as confidence falls, and then other things will be in play. That's why I believe the last 4 or 5 weeks have been so important, why the next 5 days are going to be so important, business days, trading days. And we're just going to take it a day at a time. Leah and I will be on every day around closing time. And with that, we are coming up to the 4 o'clock time period. Give me 2 minutes just to say that thank everybody that's already signed up for the webinar 3 days before the election. We are quickly overtaking the size of the audience compared to our first webinar, and we thank you all for that. For those that have not yet signed up, I've been working very hard putting together the material, and I think you will find it very comprehensive, not only talking about portfolios in a bear market and a bull market, ways of defending portfolios quickly and efficiently, and the differences between all the different types of portfolios that you can either construct yourself or that have been constructed by professionals in the form of closed-end funds, ETFs, and mutual funds. And we will name names. We will give you our lists of, in both bull and bear scenarios, where we would be, where our clients will be. And we hope you tune in, and Leah will give you one more time the details of that. It's very simple. And with that, back to Leah.
Tyler, you nailed it. I asked Tyler to end right at 4 because I do have physical therapy for my knee. With that said, wow, well done, 3:59. Tyler, do you wanna take one question?
Sure, of course.
Okay.
All night long.
Stop. Okay. Well, just to briefly, I don't think we have time to look at, but do you want to just briefly talk about the bond market right now? Because it is pretty interesting. The question was, look at the bond market and talk to how prices and yields affect the stock market. I think it's pretty prescient, and also because it's acting a little funny.
Well, a lot of people are blaming the last 4 or 5 weeks on the fact that the 10-year went from 3% to 3.28, now back down at 3.14, 3.15. And stabilized. I don't put any credence in that at all. It's simply an excuse for people that were already nervous to point to one other thing. I can't answer that in detail, but we will, because in our webinar this Saturday, the 3-hour webinar followed by an hour of questions, I've got a whole section on fixed income, credit, debt, and the relationship between interest rates and equity markets and bond markets. So for those of you that will attend the webinar, you'll hear that anyway. If the listener has not yet signed up, I will go into great detail about your question during that. Leah and I will also do vlogs, more and more vlogs on the credit cycle, because I believe it has bottomed after 40 years, and that's a very important topic.
Awesome. Last one, because we promised we'd talk about Bitcoin. So I'm going to roll something into it. So just a quick thought. Yes, it's boring, but thoughts on Bitcoin right now, but also that Bloomberg article I had a bit of a tweet storm on. Bloomberg was saying, or at least one writer in Bloomberg was saying that due to the Bitcoin's low volatility, we are seeing a bottom. So Ty, what are you seeing in Bitcoin right now, and what are your thoughts on that author's thesis?
Well, it's just silly on the face of it. Obviously, when you hit a plateau, volatility goes down because buyers and sellers aren't sure what the heck is going on. And you can get plateaus at various levels. But there is no close correlation between low volatility and a bottom. You can have low volatility over and over again, like we did when we were up at 10,000 to 11,000. As we kept going back and forth between those numbers, volatility dropped, and then so did Bitcoin. And we've seen that also with lower and lower volatility as the highs in Bitcoin keep coming down. from 12,500 to 10,000 to 8,500 to 7,500. Now we can't get above 6,800. Obviously, that's because of fewer and fewer players. There will be huge volatility very shortly, and it could be to the upside. I believe it's going to be to the downside, but don't use short-term volatility, flatness to try to make decisions.
All right, then. I like it. 4:03. All right, everybody. Thanks for indulging me to get to physical therapy. Tyler, you rock. Yes. So again, go to the website on webinars, super simple, fill out the form, pay, and then give me your email address and I'll shoot you all the login information. All the information about what's going to be covered is there. And also if there's a specific stock that you want covered, let me know. I'm sending them all to Tyler. And with that said, everybody, thank you so much for watching. Ty?
Great. Thank you very much. Bye-bye.
Ciao.